So this is a brief overview of fixed asset exchanges with and without commercial substance. So here we're interested in a situation where a company exchanges an asset for a similar asset. If the assets were completely identical, then you could easily see that you could just swap book value for book value. But what if by exchanging your current truck for a different truck, you're able to increase your productivity? This may be the case when the assets are similar but not identical on every dimension. So the question comes up, can you recognize a gain when you swap assets? And the answer is, it depends. If the exchange is considered to have commercial substance, then yes, you can record a gain. If the exchange is considered to lack commercial substance, then no gain can be recorded. But what does commercial substance mean? Well, now I can explain the picture if you're looking at the video. Beavis and his friend are supposed to sell candy bars for a school fundraiser. Each candy bar sells for $2. Well, let's say Beavis has a box of 20 candy bars and his friend has a box of 20 candy bars. If they legitimately sell the candy bars for $2 each, they should collect $80. This is what commercial substance would say. There is actually a sale going on here. If, however, Beavis sells one candy bar for $2 and then uses that same $2 to buy one of his friend's candy bars, who then uses the same $2 to buy one of Beavis' candy bars, and so on and so forth until they've eaten 39 candy bars and only have $2, they really haven't sold candy bars. There's no commercial substance to their candy bar sales. It's not exactly the same thing as swapping assets, but commercial substance, it has the same intuition. In order for there to be commercial substance in the swap, the company in question has to be demonstrably better off from a future cash flow standpoint once they've exchanged the assets. If they are economically no better off, then they can't act like they are for accounting purposes. You have activities that walk you through the rules for recording an exchange when there is commercial substance and for when there is not commercial substance, but here it is as well. If there is commercial substance, then the newly acquired asset is going to be recorded at the fair value of the old asset given up, plus or minus any cash that was in the transaction. And a gain is going to be recorded as part of the entry. If there's no commercial substance, then the newly acquired asset is recorded at the book value of the old asset, plus or minus any cash. And that there's not going to be any gain or loss. So work through those activities and ask any questions that come up.